The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 2nd. How about that, folks? September already. September 2nd, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a terrific holiday, a great summer. Thanks so much for joining us here. You know, folks, let's make sure that we do everything we can to have a great September, a great Tuesday. And I'll do everything I can here during the next hour in sharing with you extraordinary tools that help us identify where price is headed to. That's right. We'll use that lightning bolt pattern, that A to B equals CD. We'll take a look at Fibonacci expansions and retracements because the combination of those two are what create the Gartley and butterfly patterns out there. Of course, we'll use Japanese candlesticks because the bulls and the bears, they leave signs for you and I each and every day. So we'll go read those signs. Of course, this is a call-in radio and television talk show. You can give me a call at 877-927-6648. Internationally, that number is 727-445-1044. Would love to hear from you. We can go hunting for bulls and bears out here. It is Terrific Tuesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow trading off 35 points out here, trading out at 17,062. S&P is relatively flat, off 1 point, down at 2,002. NASDAQ up 9 points, trading at 45.88. Russell up 4 points at 1178. NDX up 3 points. New York Stock Exchange back 7. We've got net advancing issues with the New York Stock Exchange being down slightly. Net advancing issues 255. It would be trouble if we were to see more than 2,027 net declining issues at the end of the trading session out there today. That combined with the VIX, which is tinkering with the 50-day exponential moving average, would not be good news for the bulls out there. But we got a long time left in the trading session out here. Things moving to the upside. You've got Regeneron Pharmaceuticals, Tesla. Regeneron's up $16, Tesla's up $7, Baidu is up $6, Priceline's up $6, Synaptics up $5.06 out there. Digital Ally, DGLY is the ticker symbol. That is, that's up 22% out here. But this thing, I don't think it has a ton of volume. Yeah, it really doesn't, so we're not going to spend too much time on that. Palo Alto Networks, PANW, is up 4%. Norwegian Cruise Line, NCLH is its ticker symbol. That is cruising along. Nice move here this morning, breaking out with some volume behind the move so far, 2.3 million shares. It says traded off of its session high out here. Let's go see what it's trading into. So it's trying to get above a swing point out here. It looks like a potential consolidation pattern inside of this equity. The high that it's dealing with is 37.08, takes you back to January of 2014. You're trading just below that. Now, there's only 318,000 shares there. Shoot, it's already done 2.3 million shares. It should have the volume to take that out. If it is unable to close below, above that swing point, because that would be a swing point out here. NCLH, is that really? Look at this on the weekly chart. I was just going to say, is that really an IPO? Son of a gun. Looks like it is. So it looks like these guys came public with this equity back in January of 2013. Therefore, really not a bad-looking stock chart. The reason why I'm taking a look at that is because that swing point that we're talking about, now I'm back on the weekly chart, is January 13, 2014, 3.5 million shares. Shoot, it's going to have that volume on the weekly. A close above that price of 37.30 would set up an A to B equals CD to the upside right now. So we'll have to see how NCLH, the ticker symbol, New Norwegian Cruise Line Holdings. We'll see if it can cruise past that swing point high. Also to the upside, you've got Novartis up 3.5%, up $3. VIP Shop Holdings up a couple of dollars. GoPro up 271. To the downside and struggling here this morning, you've got Cons Inc. That's down $13 off 30%. Wynn Resorts is taking on a swing point, potentially set up an A to B equals C to the downside. Emergency Energy, EMES. This thing has been a rocket ship as of late. Let's go see if it's pulling back with light volume out here. Take a look at this thing off of the lows back in May of 2013 at $16. It's traded at 140 right now. But let's go take a look at this stock chart on its daily time frame, get a feel for any kind of volume behind the move out here. So this thing took off upside, topside, broke above its market profile resistance level. It did that on the trading session of August the 22nd. Got above the 120.78 level, and it has been off the races. Now, volume has been, decent behind after it broke above that level, 590, 566, 553, 503, 473, and on Friday, 600,000 shares. So far this morning, though, pulling back with a little bit too much volume, 268,000 shares to the downside out here. Always dangerous inside this equity is this high volume bar back on June the 20th, 3.3 million shares down there. I'm not saying that it's going to pull back there, but what you'd like to see this thing do is pull back into the top of its box out here, which probably is going to line up with a decent retracement off of the most recent swing point low from July 31st to the high that was put in on Friday. And yeah, it does go ahead and line up nicely with about a 0.618 retracement. So I would be looking at this equity right around the 118 to 120 level if this thing can pull back on light volume. By light volume, I mean less than 773,000 shares as it pulls into that area. That would be a buy on ticker symbol EMES. I think it pays a pretty decent dividend as well. So that's one that you might want to keep an eye on. Let's take a look. We've also got to the downside here. You've got Auto Home, Las Vegas Sands. Auto Home is down about $6. ATHM is the ticker symbol. That is, I believe that's an IBD stock out here. Now, this created a big bearish reversal signal, 3-candle signal, an evening star pattern out here. That was a trading session of August 25th. August 26th and August the 27th. So the market's always communicating to us, bulls and bears, always leaving us messages. Now, this had a nice little breakout-ish area on August 25th, then traded higher with about 3 million shares, similar type volume, but then it pulled back with 2.7 million shares. Now it's trading below its market profile low. Let's go see where Auto Home could come back to. I don't see any real big breakout area. You'd have to say it could come back. Let's just take a look at retracements as well. But I'm looking at the August 4th area. Let's just take a look at retracements off of its last move. That would be from, we'll use the lows out here in July 17th up to the high that was put in on this little spinning top candle on August the 26th. Hey, it's already going to make its way back to the 0.618 area, or so it looks like. That's at 41.81. Looks to me like this will pull all the way back into the 37.43 range. That's your 0.786 retracement level. ATHM is the ticker symbol on that. Also moving to the downside, Excelis Inc. That's off 52%. Geez Louise, but that's a $2 stock out here. Netflix is off a couple of bucks. Gold. So let's go take a look at the commodities out here. Let's go take a look at gold and silver. Let's go put up, I'm going to switch over tabs out here. So gold's trading up $20 out here as we speak right now. There's going to be a little bit of a delay as I pull up this market profile. But here's the problem for Goldilocks. This is the weekly chart that we are looking at. So obviously the week doesn't come to an end until Friday. However, the yellow lines going across my screen, those are the diagonal lines. Those are the rising price channel. And gold now had tested it the last couple of weeks. And this week here, so far, it has broken through that level. The area for support inside of gold out here, we want to be paying attention to the most recent weekly swing point low, which is out at 1241. That's from the week of June the 2nd. That is the weekly chart. Let's go take a look at the daily chart out here for Goldilocks. So Goldilocks, the other key level at 1241 is going to be key. Now, why is that going to be key? Because any close below 1241 is going to go ahead and bring that A to B equals CD into play, and that's at the 1194 area. And that is what's going on in the daily chart for gold. It is now what we can see here is these market profile highs, these red horizontal lines. They are acting as resistance out here. So real key, if gold is going to reverse course, you need to see it close above 1307. But right now, what we've got is gold trading back below its breakout. What do I mean by that? Let me just take this chart here. Let's just go ahead and clean the daily chart up just a bit. Let me take this off, that off. We'll clean it up just a tad. Let me take the volume off as well. Let me get rid of that A to B equals CD pattern out here. Let me delete that. So if we take, there we go. So if we take a look at gold here from a breakout standpoint, let's draw a horizontal line across my screen out here. Here's your breakout level, which is already where it's been penetrated here. And that's the trading session from June 19th. Wide price spread. Now, when you take a look at breakout areas, you like to see price coming back into the candle session. A couple candle sessions typically you'll see before that. In this case here, it happens to mark a swing point. So gold is really doing what it should do, coming back to a breakout area. That would be between 1258 1277, which is already cracked out here. If it gets back below that range out there, not a good sign. And then your next test is going to be that June 3rd level at that 1241. Where's that 1241? 1241. June the 3rd out there. And if you break that, then that sets up that A to B equals CD to the downside that'll take you all the way back into the December 31st level. So real key area, in my opinion, to be watching for gold is 1258.50. Let's go see what's going on inside of silver. You got silver back a quarter or so. So silver under pressure as well. I'll start off by taking a look at the daily chart inside of silver. If we take a look at retracements, now silver has been weaker than gold, so let's take a look at retracements off of its low out here from May 30th to the high that was recently put in here on, July the 10th out there. And what we'll see is right now what's being pierced is the 0.786 retracement level, which has held. Still time left in the day. Closing back above 1935 would be another holding of that 0.786 retracement level. Breaking and closing below 1935, that says you're likely to come down and test the swing point. In the case of silver, that's out at the 1872 mark. That's the daily low from May 30th, 2014. You crack that area inside of silver, that sets up an A to B equals CD to the downside out there. Let's go tell you where that would actually take you to. That A point out here is going to be your February 24th high. Your B point is going to be that swing that we're watching right here from the May time frame, May 30th or so. The B point, the C point is going to be July 10th. 1-to-1 A to B equals CD would give you a price projection of, well, I got to get rid of the retracements there because I can't figure that out. I'm sorry, it's going to be $18.06. That's if it breaks below that June 2nd, June 3rd area. May 30th, let me see, May 30th is 1872 is the mark. Close below 1872. I would have to say you're more likely going to see 1707, but 1806 would be your 1-to-1 A to B equals CD to the downside. That's what's going on in silver on the daily chart out here. Right now, as we speak, we've got the Dow trading off 22. S&P is flat, 39 cents. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 14 points right now. S&P is down is up a half a point. NASDAQ composite is up 13. I have a request to take a look at the S&P futures contract, the September contract, and our inquirer is looking for the TAS market profiles. You know, folks, here at TFNN, what we affectionately call Hotel California. Check-in time here is 8 a.m. Our man John Logan kicks us off from 8 to 9, and he is the author of the TAS market profiles out there. So let's go check in and see what those are. Great areas of support and or resistance, as well as where the real supply line is, the light blue level on my screen out here. If we take a look at the weekly chart out here, the weekly chart shows that the resistance area is at 1978.25. So from a weekly standpoint, coming back, testing that level, and then rejecting that level and moving higher would be bullish. Getting back inside there would be bearish. Right now, you're trading out at 2001.75. Also, from a weekly standpoint, if you were to see a close below last week's open, 1990, you would get a bearish engulfing candle. But we've got a lot of time left in the trading week out there. Really breaking the support level. And this would actually get you more into neutral territory than it would be to bearish territory, meaning getting back below that red horizontal line, 1978.25. Breaking the low, though, which is 1933.88. That is the unfair low out there. That would be something to be focused on and paying attention to. That's what the weekly chart shows for us. On the daily time frame out here, a daily time frame, I'm just going to switch over to some additional charts out here. What we know about the daily time frame is the futures contract this morning got us into a fourth wave out there, the Chapman wave out here, by getting to that higher high. The TAS market profile on the daily basis is really right about where we're trading right now, 2001 and a bit of change out here. It's a new market profile. It's been in place here for a couple of trading sessions. That low is 1985.50 or so on the unfair low out there. It's really this larger one. If you break that low, what you're looking for is this larger box out of this larger profile, in my opinion, right around the 1940 level out there. That's what's going on the daily chart. We'll see here light blue color on my screen using the Rhodes Momentum trading indicators out here. That tells us we are in extremely bullish territory for the ES Mini. That is on the daily time frame out here. If we take a look at that 5-hour energy chart out here, 5-hour energy chart, it's also going to give us our TAS market profiles out here. 1999.20 or so is going to be the resistance level, the unfair high. Right now, what we are seeing is a test of that area. 1999.20 has been tested. We've seen price come down to that level. It got down to 1998.75 and thus far has rejected that area. We do have a price relative strength divergent pattern that is out here. And that took place at 4 a.m. this morning. It really took place, I should say, at 9 a.m. 5-hour chart. What needs, as it formed a dark cloud cover candle. Dark cloud cover is a forecast. It is of the reversal signal family. 2-bar reversal signal family is what I should say. From 0 to 5, with 5 being the most bearish, this is like a 1. What it needs additional follow-through to the downside. This session here will end at 2 p.m. this afternoon on my 5-hour chart out here. Having no follow-through out there, well, you can make up your own conclusion. Not having follow through is not a good sign for the bears out here. Of course, getting above this high out here that came in at between 11 p.m. last night and 4 a.m., getting above that 2006.25, closing above that would be very bullish out here, and that is the ES Mini on its 300-minute time frame out here. If we go take a look at the 2-hour chart, we'll size it down to the 2-hour chart out here. The 2-hour chart did have a bearish engulfing candle, an evening star, a key reversal session, but what price has done is come back and has found support at its market profile low. 2000.85 is the number. Now, that is a new market profile. That's one that just established itself over the last 4 hours out here. Real key level is going to be 1996.50. In my opinion, when it comes to the ES Mini, there is really just one real level to be watching for to determine whether to be bullish or bearish. That is, unless you are trying to sell the top tick out there. And if you are just looking for confirmation for that, what we would do is we would look. I'm going to come here and I'm going to give you the number because I don't have it. I think it's 1987.75, although I don't have it memorized, so I could be wrong. But I believe it's 1987.75 out here. Let me see if I can do this before we go to the breakout here. And that is, I'm going to have to, right here, right? I'm going to have to do it when we get back from the breakout here. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 1987.75. That's the number there to be watching inside of the S&P futures contract. You see a close below that. We probably have simultaneously sell signals from the S&P. That likely would have the VIX index trading above the 50-day exponential moving average, and pretty good chance that you'd see net decline in issues in excess of 2,027 inside of the New York Stock Exchange. What would that do? That'll take the summation index down below zero inside the New York Stock Exchange. So that's something for us to be watching out here as we speak, because what we've got here, we've got some declining tops inside that price oscillator out here, and when you have that in place, it says to be very careful out there because you've got kind of what a non-confirmation, non-com. Okay, I don't even know how to say that, but you would have a non-confirming oscillator with regard to the market that is moving higher out here. Nonetheless, let's go take a look at the currency market out here, because we got the U.S. dollar index. It is on the move. So let's go take a look at what's going on inside that's what's really, what I would presume, that is what's really putting the pricing pressure that we're seeing here in the commodity sector across the board. So let's start off by taking a look at the U.S. dollar index. Take a look at that. It's now on its way to its 1 to 1.618 A to B equals CD to the upside. That price projection is 83.22. Let me go ahead and erase a few things off of my chart out here. There we go. Clean up the chart just a bit. If we take a look at the U.S. dollar index, it's trading into, this is an area where it may begin to find some resistance out here, is this gap that was in place here. I'm going to give you the price point on it. A little bearish reversal signal back in July 10th, 2013. So right around the level here of 83.64 would be a natural area of resistance. Price is not near there just yet. You're at 83.06. This has been a strong move out here. We have seen only on this move up here one bearish reversal signal, which was back here on August 27th, and quickly on Friday that just simply evaporated. Now, the U.S. dollar index is a basket of 6 currencies out there. Let's start taking a look at those currency pairs. The euro-U.S. dollar being the number one currency pair. If we take a look at where the euro-U.S. dollar is trading at, 1.31 to 225. What's its next likely move? Well, if you watch us on Tiger TV, you can see a painted-in light blue area. That's your Gartley buy. Gartley buy takes you down to the 0.786 retracement area. That's right around the 1.3019 range out here. The 1 to 1.272 A to B equals CD. That would complete at about the 1.30753 level. So somewhere between 1.30753 and 1.30192, that is the range of likely where the euro is headed to. It's in the extreme oversold condition out here. At some point in time, there's going to be a bounce, a robust bounce for the euro U.S. dollar. That bounce, though, does not look like it's going to start here at 10:37 a.m. on September the 2nd. It looks like more likely than not we're going to see lower price before we see that bounce begin. Now, this is the largest weighting inside the U.S. dollar index. That's what the euro is communicating. Let's go take a look at the other top 2 currency pairs out here. The Great British Pound U.S. dollar. The Great British Pound U.S. dollar. Let's start off by taking a look at the weekly chart out here. This has been hammered ever since they made a 3 drive to a top pattern on the trading session here of July 18th. This has been one steady move down. Now, you see that price is moving in towards this black line. That black line is a horizontal level of resistance, or what used to be resistance. Now it's support out here. How do I know it's a resistance area? Look, first it was the swing point from back in January of 2010. As price got up into that area back here in the December 2013 level, that held as resistance all the way up into the following trading week, which was February 21st, was it? February 14th, 2014, when price broke out above that area, and it did it with conviction, meaning wide price spread. We saw that price got into an extremely overbought condition. Now that has worked off. If, in fact, price in the Great British Pound gets below that area, this whole thing will have been a false breakout for the Great British Pound. What does that mean? Well, if we just take a look at natural retracement, that's what a 3 drive to a top pattern is supposed to do and look like. Unlike, we'll go switch over to the Dow here in a bit. But this is where you see, and that's on this is a weekly chart that we're taking a look at. Now, price would likely pull back into the hammer candle. The hammer candle, or it looks like a hammer candle. I don't know if there was enough of a downtrend for this to be a hammer candle, referring to the week of February 7th. Nonetheless, the likely retracement would take you down to about the 1.628 area, and I would have to say it would take you even further than that if this was truly a false breakout. So right now, you've got the Great British Pound on a weekly chart moving into what should be an area of support. Is it there right now? No. But is it close? Yes. So if the euro is going to bounce, if in fact the Great British Pound is going to bounce again, I'm not saying right now at 10.39, they're just simply moving back into areas that you want to monitor. That would impact what the U.S. dollar index is going to do. That would also likely impact what commodities are going to do. You've got the third weighting in here. That's going to be the U.S. dollar Japanese yen. What do we know about this? Well, we know that the U.S. dollar Japanese yen wants to get weaker. How do we know that? Because it broke its trend line, its trend/channel line. That's the red diagonal line going across my screen. How did it break it? With conviction. That conviction was a wide-ranging bar on July 30th. Price got above it, came back and tested it as it should have, got back above it. Now what it's done, it's like the U.S. dollar index. It's making its 1 to 2 A to B equals CD to the upside. That's in the 105.48 level. That's going to be a 100% move of a move. That'll get back into that swing point here from the trading session of January the 2nd. When you make a 100% move of a move, what typically happens? Something else. You move sideways or you pull back. Expect a retracement. Look to be buying that retracement of the U.S. dollar, Japanese yen. But likely this has got a little bit more room to run to the upside, and then we ought to see a retracement to move sideways, something along those lines inside the U.S. dollar, Japanese yen. Not at 10:41 on Tuesday, but coming attractions over the next couple of days out here. That's what I would expect to see. Let's go take a look at the Canadian dollar, the U.S. Canadian dollar. Now, the U.S. Canadian dollar out here, that put in a nice little hammer candle a couple of trading sessions ago. That was on the trading session right here of August the 29th. Now what we can say here about the U.S. dollar Canadian is that it has made a Gartley buy pattern. It has made its retracement. We know where the bulls are hanging out. That is very clear. And that is at that low on the trading session of August the 29th out here. That low is at $1.08. You break below that, that spells trouble. More likely what the U.S. dollar, Canadian dollar is doing is it's forming an A to B equals CD to the upside. That would go ahead and that would take price into approximately $1.11, $1.12. I would have to say if this is in fact going to occur, if we're going to see continued movement like we have seen today off that hammer candle, continued conviction with some wide-ranging bars, taking out the B point, which is the August 26th high, what we will likely see is a move beyond $1.11 and more likely 100% move of the U.S. dollar Canadian currency pair. That would take you back into the loonie out there, that would take you back into the March 20th level. So the loonie looking pretty strong out here after creating that little hammer candle back on August the 29th. And that is what's going on. There are two other currency pairs. We would take a look at the Swedish krona and the Swiss franc out there. But we won't. Hey, let's go take a look at the Euro Japanese yen. This actually bodes well for the markets out here because the Euro Japanese yen, we've been pointing out this trend line out here, the trend line for this currency pair that takes you back into July of 2012. We noticed how price was hitting that area as we were coming into Friday's close. Now what you're seeing is actually, and this is a weekly chart, so a lot of time left in the week, but coming into that trend line, you are seeing a bullish engulfing candle. The real question is, can the Euro Japanese yen take out this descending trend out here? If it can get over that area, that would actually be very bullish, or should be very bullish for the U.S. stock market. Again, this is a weekly chart, but so far so good with this currency pair since it began trading again Sunday evening out here, as we are seeing a rejection of a long-term trend line out here. That is what's going on inside of the currency pairs. Let's go take a look at some other things that are moving inside of the markets out here. Let's go take a look at inside the sectors. And when I say inside the sectors, the weak sector out here is the energy sector, and the strong sector out here looks like it may be the financial sector, the XLF. Why do I say it's a strong sector? Well, because most of the equities, the top 10, are in the green out here, although slightly green, with MetLife leading the charge, the upside being up 1 percentage point. In the energy sector, though, a different story. You've got everything is in the red with the exception of Williams Companies, WMB, out here. But let's take a look at ExxonMobil. Let's go see what it is doing out here. So let's go take a look at weakness, see what weakness is doing. Weakness is trading into its market profile low. If it can clear the 95 am I going to be able to see it? 98.48 level. You're traded at 98.59. Well, that would not be good for ExxonMobil. I would say the real level to be watching in Exxon is going to be the low of August the 7th. 10 million shares are down at that swing point low, 97.63. That's what we want to watch for. So far today, volume is 1.6 million shares in over an hour of trading, so volume is light on the retracement inside of ExxonMobil. ExxonMobil has not done much for ever since that downdraft from July 31st, like we saw in the markets, but ExxonMobil, a weaker than market stock. If this market is going to turn, look to ExxonMobil, look to the energy sector. Also to the downside, let's see, percentage-wise, Halliburton, HAL, is a ticker symbol. It's off $1 right now. Let's go see what it is off $1 or 1%. 1%. Halliburton is going to be the key to watch on Halliburton is going to be its swing point from August the 5th. 9.4 million shares. That low is 66.77. You're trading at 66.93. Volume behind Halliburton so far. 2 million shares going into 9.4. It's got some pretty decent volume. If it can break that 66.77 level, price should head down to about the 62.38 area. That's inside Halliburton. What else do we have that is weak out here percentage-wise inside of the energy sector? You've got EOG Resources. You got ConocoPhillips is down 0.8% out here. Let's go check on ConocoPhillips. Let's go see what it is doing. It is running the resistance at its market profile high. Breaking that would be bullish. Breaking that would mean seeing a close above 81.29 out here. Right now, just trading into its point of control, its area where it's most comfortable, its largest supply area out here in the 80.57-ish area. That is what's going on inside of ConocoPhillips. Now, let's go see what's going on inside the strongest sector. By strongest sector, I'm just looking at the two really sectors that have got, there's really three sectors, I should say, that look strong. But the strongest would either be the XLI or the XLF. Let's go look at the XLF since it's second weighting. It is a second weighting inside of the S&P 500. Let's look at, let's see, what is the strongest out here? MetLife. MET is the ticker symbol. It's up a little over 1%, up 62 cents. Let's go see what's going on inside of MetLife out here. MetLife right now taking out a most recent swing point. That is from the trading session of August 27th. Only 5 million shares there today, up with 1.2 million shares. Not too bad with an hour to go. With an hour already past us. I'll get it out. Not too bad with only an hour lapse in the market out there. We know what I wanted to say. So what is MetLife likely to do? MetLife is likely to make its way all the way up to the swing point out here from the trading session of July 3rd, 4.5 million shares there. You need to increase that share volume because of a lightened trading session on July 3rd. However, breaking above that high, 57.57, doing it with, we'll call it 10 million shares. That would be very bullish. Can it do more than 10 million shares? Sure. It did 15 million shares as it began to show some strength on June the 4th out there. It did it with 9.3 million shares on June 17th. So MetLife looks pretty good out here. Let's take a look at retracement level, see if it's above the 0.786 area out here. As we are speaking, it is above the 0.618 area, so 56.12 is likely its next target. I would say more likely it wants to make its way back to that swing point high from July 3rd. That is the strongest in the top 10 holdings inside of the XLF. Let's take a look at what is weak out here. AIG. 4 pennies, so not a lot of movement inside AIG. Let's go get a feel for what it is doing out here. AIG has recently taken out a swing point. Let's go see what kind of volume was behind its move. The swing point I'm referring to is from June 20th. 9 million shares. The price on that was 56 even Steven. Got above it with only 4.7 million shares and 6.3. Not enough volume to stay above that area. If it does get above that high, 9.1 million shares from June 20th, $56 even, Steven, you will have a very large A to B equals CD to the upside inside of AIG. Right now, just hanging out at its highs out there, and that's the weak link of the top 10 holdings inside of the financial sector out here. What else do we have? Anything else that is of significance? How about Bank of America? BAC is a ticker symbol. It's up 0.5%, up 7 pennies right now. Let's go see what Bank of America is doing. Bank of America has in essence completed. It's 1-to-1 A to B equals CD. That price projection was $60.21. It made a high here a couple days ago of $59.53. This is Steve Rhodes. This is TFNN. Right now, we've got the Dow is up 2 points. S&P is up 1. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Kind of a quiet day out here in the markets. I suppose everybody's still just making their way back from the Hamptons, and so maybe there's not going to be much in the way of fireworks out here on our first real trading day coming back from summer. Perhaps, and you've got fun buying going on over the next couple of days out here, so maybe we don't get to really see any fireworks until Friday or Monday out here. Nonetheless, let's take a look at the the overall markets and get a feel for what we're looking at. I'm going to start off by taking a look at the New York Stock Exchange. Now, the New York Stock Exchange right now is trading out at 11,050. We take a look for bullish or bearish reversal signals out here. We don't see any kind of bearish reversal signals. That's for sure. Gosh darn it. Let me switch over. I'm going to try to get my cursor active on here. Why do I have it as invisible? Always visible. There we go. Let's see if that. There we go. So now we're back. If we take a look at the New York Stock Exchange, it is so close to the swing point out here from July the 3rd that it wants to hit it. And I think that's what we're going to see it do. And that's really where we'll get a release of information for the general market out here. That swing point from July 3rd. Oh, well, the data box isn't out there. Good Lord. Give me a moment here to do that. My apology. Without the data window, turn that thing on. That needs to be visible. There we go. Now I can tell you what the actual price level is. Okay, so we're looking at the low out there is 11,069.72. That is where, and price has not hit that level. If you see it close inside 11,069.72, it says the high wants to be tested, 11,105.84 out there. That's the last time we really see any kind of reversal. Well, I take that back. There's a couple of reversal areas out here, and we can see where price is struggling. The first one's going to be right here, a little doji candle, and then you saw the bearish engulfing. You saw the evening star pattern, the entire 9 yards out here. That was on the trading session July 24th to the 25th. That price point 11,058.96 out here. That's the area where price is trying to get above. Then you've got your second area, which is right here where you saw that bear separating line candle. That was on the trading session. I'm just going to click on the line. That was on the trading session right here from July the 7th out there. And so that's another area. So 11,069, you can see a pretty narrow range, which should be tested and hit. A close above 11,069.72, you're likely going to see a move up into that swing point, maybe even get taken out. Nice little V-shaped recovery here. The problem inside the New York Stock Exchange is that it has been making higher highs with a declining price oscillator out there. Never a good scene. However, that can resolve itself. But if we see that price oscillator dip below the zero line out there, that is bad news for the bulls out there. 2027 or more net declining issues is what would be needed out there. If I take a look at the Dow, we want to pay attention to the Dow. Just looking over to another chart, see if I've got the Dow handy. Let me do this, and we'll go draw that 3 drive to a top pattern in here. Oh, come on. Work with me. There we go. As we take a look at the Dow, where's the Dow right here. There's your 3 drive to a top pattern. And typically what doesn't happen is price doesn't usually come back all the way up and test that level. It's tested it. It's rejected it. But closing above that high of 17,151.56, and we ought to see a good September inside of the markets out here. So right now you got price coming back into what should have been an extreme, and it was certainly, most certainly, was with that 3 drive to a top pattern with price making about a 0.618 retracement, as I recall, off of the lows here from April the 11th. But nonetheless, the most bearish of patterns, if you see a close above that, is nothing more bullish than a bearish pattern. The other thing, folks, just we'll watch the VIX index today. Any close above that 50-day number, which is 1579, 1578. You can see how prices are reversed off there. That says the market wants to make higher moves out here. Hey, stay tuned. Our man Basil Chapman is up next. And on Tuesdays, we've got the Option Hour. Daryl Martin, David White, Tom O'Brien, and Andy Heck. Have a Tuesday, folks. Look forward to seeing you soon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.